Now, what's going to happen to the market should that come down, right? Where, this kind of risk-free, sort of almost risk-free and little to no effort investments don't look that good anymore, especially if they can't beat out inflation. Coming into 2024, there's perhaps two pieces of news that will have the biggest impact on the real estate market in Singapore moving forward. The first of which is our best friend over here. He can be your best friend or worst enemy depending on who you ask, right? Mr. Jerome Powell, and that one thing that he controls so hard, interest rates. Okay, and so the common consensus on the street is that the Fed will taper off, or at the very least stop increasing interest rates, and likely to be the second part of the year where they may look to cut interest rates. Of course, nothing is really set in stone yet, but I guess the overall consensus, the overall sentiments have shifted from the narrative, right, in the late part of 2022 coming to 2023, where there were multiple rounds of hikes, to now there's a little bit more stability and the likelihood that it may come down. So if you followed the channel, there's a couple of things that interest rates impact the real estate market. As we've spoken about earlier on in the video, the direct correlation between interest rates and the real estate prices, as opposed to, let's say, 10 to 15 years ago, is not that high anymore. The direct correlation part. However, interest rates have an impact on sentiments. So now that's the first point, that a slight shift in interest rates will impact the real estate market. It is sentiments. So with interest rates coming down, likely to come down, and sentiments likely to take a change, now that's going to have an impact on the market. So I'm going to give my predictions later on in the video. Now, on the second point about the relation between interest rates and the market, it's opportunity cost. With interest rates at 3 point something right now, fixed deposit rates, T-bills, the savings bonds, SSB, and whatnot, a lot of the 500 over billion, 600 over billion dollars in cash is now sitting in this risk-free and no effort sort of investments. Now, what's going to happen to the market should that come down, right? Where, this kind of risk-free, sort of almost risk-free and little to no effort investments don't look that good anymore, especially if they can't beat out inflation. Where will Singaporeans channel their funds into? And with higher for longer interest rates having a negative impact or negative sentiments towards the stock market, where will all these funds move towards? Now, that's going to be the biggest question for 2023. And of course, lastly, and this has been something that I've been drilling on a lot on this channel, multiple videos, would be the stress test interest rates. And I believe that will be the single biggest impact of interest rates versus the real estate market. When stress test interest rates come down, as we would expect with SORA coming down, pegging to the Fed interest rates, I personally feel that would have the single biggest impact on the real estate market, and likely a positive one. My conclusion from this is that 2024 may be a year of two halves, really depending on when the Fed really starts to cut their interest rates. And the next piece of news coming to 2024, and perhaps one that has somewhat flown under the radar a little bit as compared to interest rates, is the likely general elections. And not just any other general elections, it's the handover of power from Lee Hsien Loong to Lawrence Wong. I'm not sure if you can remember the last time a handover of power was done. That was in 2004. Just nice 20 years ago. And I sort of found a little bit of interesting trivia thanks to our good friends over at Google, right? Google's AI. I went to Google and went to Bud to ask them about, what happened in the real estate market in 2004. That was definitely before my time. And I found some pretty interesting similarities between that period of time and where we are today. So the first similarity is that both of these periods were the end of pandemics, right? So in 2024, Singapore was just coming out of SARS, and we all know over in 2004, we were just coming out of SARS, and 2024, we were just coming out of COVID. Interestingly enough, the real estate markets were quite similar at that point. So now if I'm going to read out what's happening during that period, it will sound quite similar to what we are seeing in this period today. So if we zoom in and we read this out, right, the Singapore property market in 2004 was characterized by slow growth and slightly downward trend in prices. Of course, on this part, probably not so similar. This marked change for the years immediately preceding, which saw robust price growth, right, circa 2021, 2022, right? Here are some key points to understand about the market in 2004, right? Prices overall mild decline, right? Transaction volumes subdued, right? Remember what happened in 2023. Factors influencing the market, government cooling measures, right? They had to introduce several rounds of cooling measures to moderate prices and prevent overheating. Tighter restrictions on lending and rising stamp duties. Hello, very similar, right, to whatever we are seeing right now. Global economic uncertainty, right, coming out of SARS and other factors, okay? And oversupply in certain segments, of course, on this note, not that similar today, but in the overall vibe and, narrative of the whole thing, does it not sound very, very similar to 2023, 2024? So I just found that to be pretty interesting. And if you want to see where prices were at, so over in 2024, so this one, of course, take it with a pinch of salt, right? But if you see the similarities on that side, then you want to borrow some of the, foresight from before, after which, we went on quite a good upturn, right, as Singapore exited SARS and as we went through a round of economic restructuring and the economy went up pretty well. So on this note, hopefully we follow it, right? But hopefully not this part, 08, 09, come the Great Recession. But why did I put this general election handover of power as, the second biggest piece of news after interest rates is that the Singapore real estate market, so it's not that, I want to discuss politics or anything, right? No. But the one thing that we can't run away from the Singapore real estate market is government intervention. We are probably one of the most intervened real estate markets in the world. So as we can see over here, in terms of LTV, we have 6 rounds of LTV interventions already. In terms of ABSD, 5 rounds of ABSD intervention, 4 rounds of TDSR and MSR intervention in the market. So all this intervention is with the general idea and general direction of not wanting runaway real estate prices, and that's all the more important during this period because they don't want runaway prices, especially when we are going to enter into such a significant period in time, especially in terms of politics, especially in terms of power, so to speak, right? They want a smooth handover over into the next 4G government. So now that's my reason why this, in my opinion, is the second most important piece of news coming into 2024. And that brings us nicely on to our next point. The 3 things that worries me in 2024. Now, the general worry coming into 2023 was the likely recession that everybody predicted and the potential job losses that comes with recessions. I guess that concern has somewhat subsided together with the fact that, the Fed has come out to state that we potentially will come into the soft landing, the all elusive soft landing, which is why they have changed their tone over to increasing interest rates to now tapering off and potentially dropping them. So now, with that concern having eased, we have a new set of concerns coming into 2024. So like I said earlier, in the second big piece of news with the leadership handover and potential elections, should prices take a sharp spike, as I predicted that they will take, should interest rates come off quickly, the government may be forced to step in to cool the market, which is my first concern, the likely chances of cooling measures should rates come off and prices take a sharp spike, because fundamentally the market, people are making more money, as we have seen in the MAS Financial Stability Review. People are sitting on a lot of cash right now that's parked in risk-free, effortless investments that are yielding pretty decent returns. Should that come off, demand will then shift to other asset classes, of which property we know it's Singaporeans' favorite. The reason why I foresee a sharp spike in prices should that happen, okay? So now, with demand being somewhat consistent, not having been taken off the market, demand is consistent, probably coming up should rates come down. So now if we look at on the supply side, while supply of new launches may look like they are coming up, we can see over here, supply of new launches on a 10-year average is still very, very low. GLS have come off a sustained period of undersupply, and over in the new launch market is still undersupplied. And if we then take a look at other forms of supply which comes in the resale market, right, we have ECMOPs, right, which is a good supply, especially for the HDB upgraders. In 2023, there was 4,100 ECs that hit its MOP, and that number is going to drop off significantly in 2024, with only 3 ECs expected to hit their MOP. We have Inns Residences in Choa Chu Kang, we have 100 Palms over in Serangoon, and the last one is North Wave over at Woodlands, right, contributing just 1,300 units. So that's a significant drop-off in ECMOP supply for the private residential market. Next up, we have the private TOP market. So these are new developments that have just collected their keys. Over in 2023, we have a bumper crop of 14,000 of them, and that's going to come off into 11,000 expected for 2024 and continue on that downward trend all the way to 2026 with just 5,000 to 6,000 units. So now all of this is going to squeeze the private market of supply, and so that supply squeeze has been there for the last 2 to 3 years, and as we have seen in 2021, 2022, that has caused a spike in prices. That demand supply imbalance is somewhat well managed, right, with demand being held back because of the increase in interest rates. Now with interest rates likely to come down and on the back of undersupply, this then reinforces why I say if not controlled well, and if rates were to come down sharply, demand will spike up and supply just cannot match up in time. Like I've always said, demand can be controlled easily, right? Pump cooling measure comes, demand can be controlled. But supply cannot be controlled that easily. You don't build a house today, you're not going to get a house until at least 4 years later on. The government have already sensed this happening, which is why they've been trying to ramp up GLS supply. But whether or not that is in time, time will tell. Okay? Now, the third thing that worries me is the lower land bids, the low number of land bids, be it the amount of developers bidding for the land, and secondly is the land prices. Okay, so low number of developers bid, chances that the land prices will continue to come down is a real concern to me, right? But like I explained earlier in the video, that's on the back of 13% year-on-year increase in construction costs. We also have GFA harmonization. Now, it's going to take time for the market to sort of get used to this and to understand this. So time will tell, especially with the launch of the first couple of batches of developments in GLS, right? First of which I believe should be Jalan Tembusu, Plot B, the one across Tembusu Grand, one of the first developments to launch post GFA harmonization. That would be one of the interesting data points that I will be looking at to sort of tell how does this whole GFA harmonization thing play into the final consumer, how much developers will launch the developments of that. Low land bids, something of a concern, but not overly big, especially if it turns out that the developers are just passing on all that cost over to consumers at the end. But if not, if the launches were to continue to show a reducing land price, reducing PSF as compared to a close competitor. That will be something that concerns me in 2024. Next up, here are 3 data points that I will be monitoring closely in 2024. Number 1 is the stress test interest rates. What are the stress test interest rates for those of you who are joining us only on this part? The stress test interest rates are the interest rates that the banks utilize to evaluate your TDSR. So our MAS has stipulated 4%, the current bank stress test interest rates hover at 4.5, 4.7 or 4.8% depending on which banks you go and depending on what kind of properties you buy. And I have consolidated a table to illustrate to you the impact of a slight change in these stress test interest rates. And I'm going to pull it up again for the benefit of those of you who are just joining us on this part. Assuming you have a combined household income of $10,000, right? If the banks were to adjust their stress test interest rates from 4.7% down to 4%, right, you're gonna have a bump of $130,000 in your budget. You can take additional loan and then that's the increase in budget that you will have. If you have a combined household income of about $22,000, you're gonna have a bump of budget of $270,000. So as I mentioned earlier on in the video, this is the biggest and most important data point that I'm monitoring, because should this stress test interest rates drop, everyone across the board is gonna see a bump in their budget, and that difference between the seller's asking and the buyer's budget, right? Should the buyer's budget get bumped up a little bit, and as that gap narrows, one of the buyers, right, some of the buyers were bound to just bite the bullet and make that jump up. And once a buyer will create a seller will become a buyer, and so on and so forth, and that triggers the start of the new upturn in the cycle. And that brings me nicely to the second point, which is HDB resale price index. While this is the best data point that I can monitor, there seems to be a small disparity between the resale price index and what is happening on the ground, to be precise, right? Especially now that HDB is starting to split up the supply in terms of 5-year MOP and 10-year MOP units. So, you know, they probably and they might have to make some tweaks in terms of how they calculate this resale price index, because that may not have a direct impact or direct reflection and accurate reflection of what happens. So to give you an example, in this year's market, if you were to go to somewhere a little more central, prices are still on the uptrend, pretty stable, or on the uptrend. But if you go to somewhere in the more outskirts area with supply being a bit higher, especially the MOP supplies being a bit higher, you do notice prices either maintaining at a level or dropping off slightly. For those of you, while this is the best indicator for us to take a look at, it kind of really depends on which area you are at. But now, why do I still take a look at it if it's not, you know, the most reflective of them all? I want to see if the price index really will take a dip. Okay, if it doesn't take a dip, then I think in terms of the upgraded demand, so to speak, especially for the first half of 2024, will probably mirror quite closely to what we see in 2023. But once this price index takes a dip, and let's say takes a dip over 2 consecutive quarters, then that may bring us back to the days of seen here in 2018, 2019, where private hits up and HDB prices hit down, and that will sort of create a reverse FOMO phenomenon whereby HDB owners then start to rush to let go of their HDB because they feel their HDB prices are coming down. Right now, they don't have that feeling because prices have been somewhat moving in the same direction, right? So once, if it were to start to dip off and private continue to go up, then that will create a little bit of FOMO effect for the HDB upgraders. Then that would sort of perpetuate uptick in the price movements over in the private sector. Next up, one of the third interesting data points, it's the new CCR DOB supply performance, right? Case in point, our friends at Leiden Green, Copa, for example, these are the first batch of the new launches in the CCR that came up 2 to 3 years back. They're finally hitting their DOB, and right now it's where, right, it's the true litmus test, the value proposition on such units, okay? Because the sort of the narrative during their launch at that point in time is because everything else, the prices have gone up, CCR has been somewhat stagnant and moving sideways, and so that this gap is getting wider and wider, and eventually, people are going to realize it and then jump into the CCR market. I still very much think that there is still value propositions in the CCR market, but then again, like I said, the CCR market is not created equally. The supply into the CCR market is a lot more diverse as opposed to the supply in the OCR and the RCR, so you have to pick correctly. The reason why I'm monitoring that data point closely, especially the profitability of those units, is because this is the first time we're going to see, while one bedder's 300-400 square feet we've seen before, right? Two bedders at 700 square feet, especially in slightly larger size developments like Leiden and Copper. We have 900 square feet, 3 bedders, 1000 square feet, 3 bedders. This is one of the first few times you're seeing this kind of supply come into the CCR market. Supply that have been very well received and performed very well in our OCR and RCR market. Now, would that translate over into the CCR? Now, that's something that I'm very, very interested to find out. Okay, and next up, right, since we are on this table, I'm going to share with you a little bit of the data, and we break it down into this chart, right? You can notice post 2015, the OCR outperformed everyone else. You can see over here it rose up pretty high. But in the last couple of years, it was the RCR that outperformed. And perhaps let me share with you a little bit of the change in data that can sort of correlate to this change in price performances for the areas. Notice here, this is a table of the private residential supply by expected year of completion ranging from 2016 to 2020. Notice over here very little numbers in the CCR, primarily in the OCR, okay, 60%. And you can draw the correlation once a lot of new launches come up in a particular area like the OCR, then they tend to outperform in this period, tend to outperform the rest. Now there's a change. Right, we see over here, the TOP from 2023 over to 2027, the chunk of supply is then going to come in, still in the OCR, but that split now has shifted quite a fair bit over to the RCR and also the CCR, with RCR picking up a lot of that numbers. And this, I feel, is one of the key reasons why the OCR has outperformed the OCR, with the property price index primarily pushed and led by new launches. Okay, so now with more and more CCR launches coming its way and TOPing especially, hopefully we may see a slight change up in this direction. It's sort of going to bring a lot of attention and a lot of self-fulfilling kind of conviction into the CCR market. And here are the 3 launches that excites me in 2024. But first of all, I need to caveat that these are the lists that I currently have based on the sites that have been en bloc or have been sold via GLS. It will not include those that have not yet been sold. I have another list for that. Basing this off also based on the fact that it's price aside and layouts aside for now, okay? And I will definitely be doing a review for these 3 sites. So you may want to put into the comments if there's any of the launches, upcoming launches in 2024 that you would like me to review, in my traditional 3 things I like and 3 things I don't quite like manner. But these 3 don't need to put it into the comments, for sure I will review, okay? First and foremost, it's the Toa Payoh GLS. I've always been a fan of the Toa Payoh area, blue chip area, so to speak. Mature town, not a very high number of condo supply in that area. If I can remember correctly, should be just 4 existing one, and this should be the 5th one. And considering the fact that this is perhaps the better plot in that vicinity, right, with Gem Residences right across the road. Gem Residences, the sales were not that good during launch because of the fact that it was beside the temple. So this plot doesn't have that issue and it's actually closer to the MRT. So very, very excited about what's in store for this plot, as well as the developers. We have the very good developers CDL, Frasers and Secrecy worked on seaside residences together. They put that off pretty well, and then now adding on to another old-timer CDL, and good size development at 800 units, okay? So it's also going to be anchored down by Good School, right? I believe we will have one of the CHIJ, the top CHIJ Toa Payoh, and we're going to have Peichin as well. Expected launch price about 2.4 to 2.5k PSF, which is basically this year's RCR pricing. Right? So if they launch at around that pricing, I think it's going to be a really good deal. Something that you guys can consider. Next up would be the Tampines Avenue 1 site, one by CapitaLand, UOL, and Singland, again the big boys over here. A couple of things I like about it, okay? Number one, 1190 units, very big size development, very rare, quite rare nowadays to have so many units in a development. Another reason, okay, is this, the low estimated break-even, but bear in mind this is a number that's derived from HPROP. When it comes to this sort of mixed-use integrated developments, so to speak, not so easy to come up with the break-even lah. But if it does come out to be somewhere along these lines, meaning they can potentially launch at 2000, 2100 PSF, and I would think that's a very, very good deal considering its size, considering the fact that it's surrounded by a lot of new BTOs and all those 5-year MOP BTOs. It's essentially a new town. For all intents and purposes, this part of Tampines, for if they were in any other part of Singapore, right, they could have formed basically a new town on their own. HDB, just because they don't want to go into the effort of marketing a totally new town, they want to borrow the fact that Tampines is already so established, they just put it like, as part of Tampines North. Okay, so 1190 units, basically that's the biggest reason why, I'm paying attention to this particular plot. Next up, we have Chuan Park, okay? Long time in the making, they undergo a lot of issues with the strata board and whatnot, right? So this one, the developers, Kingsford, just a couple of years back, I would have concerns whether or not they could have pulled off the development, but I think they sort of turned the narrative around with their excellent execution of Normanton Park, so I don't think the Kingsford name is going to impact that so much, right? Again, very, very anticipated launch, right? The former Chuan Park. Again, it's also because of the number of units, 916 units, and the Lorong Chuan area hasn't had a new development there in quite a while. So this is the other launch that I will be paying a lot of attention to, and these are the 3 launches that really excite me in 2024. And here are my top 3 picks of the GLSs in 2024. And for pick number 1, it's gonna be the Zion Road Parcel A. So this is likely to be a residential development with commercial at level 1, so think like Piccadilly Grand, that sort. Not exactly a full integrated development with a mall below, but what's exciting is the fact that there's going to be a 1170 units, perhaps the single biggest development in terms of number of units, right, in and around the River Valley area and connected to Havelock MRT. And it's going to be walking distance to Great Wall City. While it's not Great Wall MRT, but this distance not too far off, right? It's going to be just one bus stop down to Great Wall City. If you are already on site, this is actually a very short walk, very good distance. It's actually quite nice, close to the amenities over here, not too far from Tiong Bahru as well. So in terms of actual stay, right, while I'm not so sure about if those two atas, a bit snobbish people would think that, hey, well, this is a bit close to the HDB, right? But to me, I actually do think this is a lot more convenient as compared to, let's say, you go a bit further up into the Martin area. Of course, more atas lah, right? Not so close to the HDBs and whatnot, but to each his own, right? But why did I pick this as one of the exciting sites that have my attention, that I'll pay attention to? This is likely to be the first of a series of land sales to happen in and around the new Great Wall MRT station. The government has been very strategic to launch all these plots only after the MRT has opened. This definitely is going to be more popular than this plot that's also up for sale, primarily because this one, it's very thin and north-south orientation, so it's going to be very tough for the developers to build. If they build this way, everything is east-west, it's going to be terrible. If not, they have to build like that. It's a bit tricky, okay? This will be more popular. Again, the government very smart to sell this one first before selling this one, because this one is easier to build, north-south orientation, okay? And if you zoom out a little bit, they will likely sell these plots first before activating the land for sale over here. Here we have the Irwell Hill, but here is an empty plot with the international school moving out. There's plenty of plots around here as well. So they're going to wait for all these plots to sell finish, then they slowly start to launch here. I've talked about this almost 1.5 years back when I was analyzing the River Valley area. I actually preempted this from happening. I could find that link and put it down into the description or somewhere in this video, but very, very clear what the government's intentions are. And next up, right, would be all these plots that will be close to like 4,000, 5,000 PSF already. I do expect these ones to come in at 3,000 plus PSF already, and then this one will then come in at 4,000 plus, considering it's walking distance to Ion Orchard. Pick number 2 will be the Holland Drive plot. This one beside the newly TOP One Holland Village, right? And One Holland Village Residences that's going to TOP, I believe, sometime next year. And so this one is going to 680 units. When One Holland Village first launched, take-up rate was not very good lah, because of the price point that Far East priced it at. But you know what? Till today, still pretty much fully sold already. And if you compare the prices with the launches in and around the market right now, it actually do look like it's not that bad a deal after all. And what I think might happen, I believe Far East may put in a bit over here so that they sort of have a monopoly over the Holland Village area, and so merge it a little bit quite nicely. And if Far East wins that, then you don't expect the plot to be sold for cheap already. I mean, I do think this will be quite a hotly contested site, but then I think if Far East wins, then all the more you're not gonna get it for cheap anymore. And the third one would be the Bayshore plot, the first residential plot to be launched in the whole new Bayshore precinct. While this is not a confirmed site, it's under reserve site, the word on the street and the experts' opinion is that this will then be triggered quite soon. They predict it, right? So, you know, this one will be very popular. Why? Because number one, sea facing, sea view. And if you look over here, the most immediate previous launch in this vicinity was actually Seaside Residences. And for those of you who follow the channel, you know we reference Seaside Residences quite a bit, and especially because how profitable they were. And now this Bayshore plot a bit further down the road, similarly Seaview, albeit Seaside District 15, this is District 16, but this is smack in the middle of a future transformation as well. A lot of HDBs coming up, and just one MRT stop down. Not a lot of people know about this, but this color means it's going to be an integrated development over here, and that's really then going to bring up the attention and bring up the liveliness of this whole area, because if not, in the absence of which actually there's a bit of a lack of amenities for an area with so much residential units lah. But yeah, exciting times beckons also for the Bayshore area. And here are some of the opportunities that you might want to consider in 2024. I start off first with some of the gaps that I observe in the market right now, which is, I believe, in the upcoming years, the new launch market, especially for the 2+ study, 3 compact and 4 bedders, will be extremely profitable. The reason being that especially you need to see the gaps between some of these developments. Some of the newer 2+ studies, depending on the layout, I believe they will sell as 3 compacts in the future. And if you spot some areas whereby there are not that many 3 compacts to serve the entry level 3 bedders in a vicinity, those are also very good gaps to fill in the market. 4 bedders, right? Then you just have to analyze existing supply of 4 bedders in the area. What kind of sizing are they? Are there a lot of supply there? Most likely, the answer is no for those, right? And if you know you can get a new launch 4 bedder in terms of quantum at the same price, I think that's quite good already. If it's even lower, it's all the better. So these are some of the gaps that I will observe in the market, and you know, pick some of these units up for yourself. 99 years leasehold landed. So I thought really hard about, you know, whether or not to put this inside, because I must confess that, right, I was not a fan of 99-year leasehold landed for the longest time. I believe you check out my previous videos, I've always said, you know, if you want landed, buy the freehold one. But, right, in recent times, I have noticed that not just, you know, some of even the older 99 leasehold developments, case in point, your Mandarin Gardens, your Neptune Court, Laguna Park, those 30-40 years, Pine Grove 30-40 years, their prices are still edging upwards. And I'm surprised to see some of those prices in your Laguna Park 3 bedders even crossing the 2 mil price point. And then I see some of these leasehold landed properties that are not even nearly as old, right, that are offering, you know, I've seen some in the District 16 area, 3,000 3,000, 4,000 plus square feet built up. It's not even strata, you can tear down, fully rebuild, right? 2.8 million, 2.7, 2.6. I do see, right, that this 99 years leasehold landed will start to move up to fill the gap. So new launch always will take the lead, right, followed by, you know, the rest of the 99, generic 99 years and generic freehold developments, then the older 99 year leasehold developments, then your freehold landed, and of course the time the circle of the market has come for the demand to flow back, because the 99 year leasehold landed units really has been lagged to a lot of all these moves lah, right? So something to really consider. And you know, if you're concerned about I buy now, then next time still can sell or not. I guess in recent times, there's also a lot more data to show that if the price is right, despite the lease decay, right, there's still going to be demand for it. Just remember this point, that demand in the market is not homogeneous, right? Demand is a lot more price sensitive, so to speak, right? And at the right price, there will still be buyers for your unit, right? Next up, the new versus old supply. I wouldn't dive into this too much, right? I talked about this a lot in 2023, and I believe will still apply in 2024. But just a very quick summary of which is that, you know, if you go into a certain area whereby the new supply or your newer supply, right, it's a lot more expensive. Most of the time it's freehold, slightly larger developments. Case in point, District 15, CCR, D10, D11. The older layouts, bigger in size, 3-bedders, 1,300, 1,400 square feet freehold, so quantums are large. Alternatives will be, you know, old 99-year developments that are still performing well. Make sure you check those out. They're still performing well, right? It goes to show the sheer demand in the area, and if you can pick up something that serves the in-between, 900 square feet, 1,000 square feet, 3-bedders, 99 years, be it new, be it sub-sale, so to speak, you know, then there's a good move upwards lah, because I've studied all these 99 years old developments quite a fair bit in 2023, and I'm surprised to see a lot of them still doing well. And you know, if they do well, you can tell yourself that, hey, this area, the demand is good, and so you know, you can pick up something that in between there lah. It's quite tricky. Some of the prices have came up quite a fair bit already, and if they come too close to this or too close to 99 years leasehold landed, they may be a little overpriced, so be careful about that, right? So those are some of the gaps over there. Secondly, it's low land price launches, okay, which early on in the video I've picked up some of those. Right now, land prices have sort of taken a dip, and I believe they are picking back up, so the GLS next year should pick it up together with consensus, interest rates and whatnot. So some of those launches, if you can catch those low PSF ones, will be a really good opportunity for you. Now, as with next year 40 over launches, right, there's definitely going to be a lot of hype over those launches, but don't forget to pay attention to some of the post-launch units, some of the balance unit. Remove that connotation that, you know, hey, so good, why not so, okay? Strip that aside, remove the emotions aside, just be objective about it, especially if sentiments start to move for next year, right, 2024, and there's a lot of FOMO into the newer launches, and especially because some of the launches that's happening next year, very, very good. You have your, you know, Toa Payoh, like I mentioned, you have your Tampines, you have also your Clementi, you have Pine Grove, all those quite good ones that will attract a lot of attention. But you know, there are still some good value buys in the post-launch markets, especially the slide that I shared earlier on those that didn't catch the 50%, never crossed the 50%. Not all of them can buy, right? Pay attention, but don't forget about them, okay? Sub-sale, I believe there's still opportunities out there. Just be very careful with the kind of quantums that you're buying into. If you're going too close to the newer development launches, then you got to be careful, right? Especially if you're buying slightly larger units, you may be squeezed in terms of the supply. But if you're buying something a little smaller, and if you notice there's a lot of supply into that area, right, it can be a decent opportunity for you to grab something that is not sort of overpriced, above valuation and whatnot, where the supply and demand dynamics is a little fairer. Okay, especially if you're a buyer lah. Right. Next up, fundamentally strong CCR properties. Okay, so while the CCR, if you look at the price index, tends to be tapering down, if you go to the right areas, the prices are actually coming up lah. If you really go study, right, some of the PSFs is just nowhere near the newer launches in the OCR, in the RCR, right? You can still find freehold developments in terms of their PSF close to 2,000, District 10, District 11, some more within 1 km of good schools, right? So all this, I don't think they will go too far wrong. And especially, PSF is so far away from the new launches, RCR, OCR, right? The quantums can't be that far off anymore, right? Maybe 1 to 2 years back, the quantums were still quite far off, right? But once the RCR new launches 2,500 PSF, that quantums will then be very, very close. So, don't remove CCR altogether because the data doesn't suggest it, especially if you are looking for investment and you want to be contrarian to the mix, right? You can pick up some of these 3 and 4 bedders CCR, fundamentally strong CCR properties. What do I mean by fundamentally strong? A decent size development anchored down by good schools, quite simply so, right? Amenities or whatnot, not so important, right? That's what I mean by fundamentally strong in the CCR, strong resale transactions, that kind of thing. If you're an investor, you can pick up some of the 3, 4 bedders around there as well for the right price, okay? The only issue is sometimes quite tough to get right prices in those developments, but if buy for own stay, you just have to pay lah. I like to call it a term of musical chairs, especially for those in the your District 10 area within the good schools lah. It will just be one family that needs it for the address passed down to another family that needs it for address. And for those if you can get anything remotely near valuations, you should just grab it already. Don't expect anything below valuation. Most likely you need to pay COV, and if it's not crazily high above COV, something that you can still consider. Okay, right? Resale around the areas with a lot of GLS happening is also something that you can consider. The Lentor area, I think it's already in the past already, right? Some of the GLS areas that I talked about just before, right? My top 3 GLS picks. You can pick up some of the resale units in that area because the new GLS is going to bring a lot of attention to the area. You're front running it a little bit. Once the development launch, I believe everything else is sort of priced in already, right? But if the GLS is launched and you pick it up during that time, I think it's still early enough into that game lah. And lastly, again, ECs, right? As with 2022, 2023, still I believe is a decent value proposition. Still a lot of supply, especially in the MOP market, yet to be absorbed, right? So something that you can consider. Or even the newer ECs, right? You definitely end up better on the other side, especially because of the fact that you're forced to hold it for 8 years. You may feel that, wow, the PSF now for brand new EC also so high, but the sheer amount of holding period will make sure that you come out better on the other side. And finally, my predictions for 2024. And before I begin, don't forget to put your own predictions down into the comments to qualify yourself for the $200 cash prize. If you want to qualify for that, also make sure that you like and subscribe to the channel. Okay, now let's get right down into it. So for my 2024 predictions, this time around I broke it down into a little bit more systematic manner into the sort of different segments, okay? Starting first off with HDB resale. This is one of the first things that differ from my 2023 predictions to my 2024 prediction. So in 2024, I do predict that HDB resale price index to remain stable, if not still continue to climb a little bit. And as I explained why earlier on in the video, reclassification of BTOs, right, with the 10-year MOP, the prime and the plus flats, is going to be a real game changer for the HDB market, which means in today's, because in HDB supply, right, it's either resale or new, but now in terms of new, right, they have split that down even more significantly, basically making HDB less investable in a sense. But on that note, right, it also means that it reduces the actual supply of brand new HDBs into the BTO market, because those that want to upgrade and want to turn it around quickly will not pick the new 10-year MOP ones, right? They will instead go into the resale market. So previously, my assumption that should BTO wait times drop, all the demand will flock back into BTO. That will change with this reclassification. And so if there's more demand buying into this central location, HDBs locations whereby the newer BTOs will be under the prime and the plus rules, all those demand will continue to push HDB prices up and maintain it that way. But then again, if you're in a location that has high number of MOP units, and also the new supply, it's also 5-year MOP, then that is where you need to be a little bit more careful, because then in those areas, right, prices may come down a little bit, because if buyers want to go into that area, they have quite a good alternative into just buying the newer BTO. Okay? Second prediction, HDB resale volume to increase primarily because we have not yet seen a spike in terms of the HDB resale applications despite the bumper crop of MOP units in 2022 and also 2023. The numbers basically has been all hovering around the same level. So I do expect that to increase, and especially if interest rates were to drop down, I do expect them to increase quite a fair bit as people then finally are able to get a bit more loan and to make that jump into the private market. In terms of the supply in the private market, I do expect it to be even greater undersupply in 2024 as opposed to 2023. First and foremost, MOP numbers have come down. Secondly, TOP's numbers have come down as well. So effective supply, right? Not to talk about the new launch supply, which then obviously has come up a little bit with this year having 40 launches, but effective supply means supply that you can buy and move in straight away. The numbers will actually come down in 2024 as opposed to 2023, and with sentiments then starting to pick up. So 2023, I think all in all, you could sort of describe it as somewhat of a buyer's market already, especially in certain areas, MOP, ECs especially, right, with the sheer number of MOPs. But next year MOP numbers, EC MOP numbers have come down. I will see that dynamic sort of shifting back to probably a bit more balanced, especially in the first half of the year before interest rates come off. And once interest rates do actually come off, they may then swing back to being a seller's market due to the undersupply. Okay, and then the overall property price index to continue on its uptrend, because I don't foresee any severe in terms of demand, unless of course demand is hit. In terms of supply, it's still going to be relatively low unless external factors involved. But generally, if you compare 2023 to 2024, the overall sentiments seem to be a little bit more bullish in 2024 as opposed to 2023. But of course, nobody knows. So in the absence of which, I do expect to see the PPI continue to pick up, but probably not at the rate that we saw in 2021, 2022, right? Probably more similar to 2023. And if rates come off, then the rate of increase will be a bit higher. So now next up, CCR property price index, of course, because it's gone on a multiple years of being low or balanced off. This year, we're going to see the TOP of Copa. We have already seen the TOP of Copa, but you know, transactions slowly come in. We see more of it in 2024. We have Liden Green and a few more that's going to hit its TOP, and I believe those new supply being of a slightly smaller size, more affordable quantum, will start to drive property price index prices up, especially in the CCIs coming off a really low base. So hopefully then that would then bring a bit more attention into the CCI. Also thanks to the fact that we're going to have finally a little bit more GLSs in the CCI with our Zion Road, River Valley, all of which, should they then launch within the next year, push PPI prices up. The CCI, I believe, will continue to outperform, and outperform compared to who? Compared to the OCR and the CCR, right? Because of the sheer number of TOP units still in the RCI, and because of the fact that there's still going to be, in terms of the next couple of years, still going to be quite a fair number of developments to be completed into the RCR, right? The OCR, because of the launches and whatnot, and the price gap being quite near already and having seen a huge spike up in prices, I believe RCR will perform better in that sense as opposed to the OCR. Private volumes to increase, of course, primarily thanks to more launches happening next year. This year's base have really been quite low, so I do expect the volumes to sort of pick up a little bit more. And also next year, this year a lot of TOP, right? But the TOP, yes, there have been some transactions and whatnot. Quite a lot of them are surprisingly not out of SSD yet. So next year, more out of SSD, and I do see the trend happening a lot more come next year. And also waiting for sort of the demand to sort of come in, rates to come down, stress test interest rates to come down. So again, right, everything really hinges on interest rates movements. But sort of these predictions, assuming everything remains the same, of course, if interest rates were to taper off, then everything else, all of these predictions will then move at a greater magnitude. Landed price increments to ease, right? Landed prices have gone up quite a fair bit already. And actually, if you look at the charts, the landed prices and the condo prices, the gap is quite big already. It's one of the biggest in a while. So in that sense, the affordability for people to make that jump up to the lender, I believe, has slowed down. I've monitored the blended market a little bit, and actually I do notice asking prices tapering off a little bit. But asking prices tapering off does not mean prices actually do come down. It's just that owners then cannot ask for that high of premium above past transacted, that high of premium above valuations anymore. They are becoming a little bit more realistic as their listings on the market for a slightly longer period of time. So now what that means is that for those of you looking to upgrade to a landed property, a couple of things you can think about, right? Number one, don't be kanchong to do so, right? I don't think prices run away that quickly. Lender always is a bit laggard. So even if rates drop, the condo market has to start to grind and start to pick up its pace first before the lender start to pick up. The lender has really just picked up quite a fair bit in 2021, 2022. So now it's sort of tapering off. Condo need to catch back up before lenders start to move again. I do expect rentals to continue to stabilize. I don't expect it to drop too much, right? Primarily because of the fact that people have bought their houses at not that cheap a price lah. So they don't want to rent it out for too cheap. It's not like interest rates are going to fall off the cliff anytime soon unless anything happens. So people again, right, still have to pay their mortgages. Property tax has come up, so then they have to also make up for that cost. So there's going to be a baseline to which landlords can lower their prices. And if you've watched the video earlier on in the start, some of the rule changes the government have done in the rental market sort of hinting to me that they may potentially want to bring in a lot more people, right? Which is why they are doing all those slight changes to make sure that the rental market is well supplied before they open the floodgates to bring people in. But of course, right, 2024 maybe the year that we have the elections coming in, so maybe they can't do that on the too obvious level. Last of which, if interest rates were to come down, especially the stress test interest rates, then you do expect sharp price movements upwards, primarily because of the fact that income levels have actually picked up. No recession, no widespread recession, widespread job losses, so fundamentally there's no wealth destruction, right? Wealth right now is primarily just being channeled over to fixed deposits and whatnot. And if you can see it from that way, it's all just stored firepower, right? Fire powder, just waiting for that slight ignition to happen and for all of that to kickstart the whole motions again. Of course, I don't hope for that to be overly drastic. If not, cooling measures will come in. The government seem to have caught their bearings quite well by trying to preempt that by doing a lot of slight tweaks here and there, pumping out GLS supply preemptively and whatnot. If not, then these are my predictions. Every year get more and more, so giving myself more and more chance to get things wrong, but hopefully not. Hopefully they are quite accurate, and so we'll see how I do 1 year from now. And as we come to the end of this video, I would like to thank you so much for your continuous support of the channel. For those of you who do support us over the years, right? Again, this is our 4th time doing this. And for those of you who are new to us, I hope the video has been beneficial to you. So if you're looking to do something in 2024 and you hope to have somebody just double check on, like, you know, how do you fit into these overall narratives I shared with you, some of all these opportunities, not quite sure what to do with all this information, feel free to reach out to us and we'll be happy to help you out. If not, wishing all of you a very happy 2024 and to a more successful 2024. Bye bye.